Greetings to you all. Welcome back to the channel. This is your host, a strategic investor Al, checking back in the building. I hope that you all doing well, prioritizing your well-being and your loved ones. So for today's topic, I would like to cover MSTY's 52-week low price range. And to be honest with you, the torture might not be over yet because of his underlying performance. But before we get into all that, my usual disclaimer. This is not financial advice. This is just strategy and experiences. Please do your due diligence before investing in any kind of investment, all right? Be smart with your money. All right, so let's dive into our topic. Why, and this is just my, like I said, my personal opinion, why I think this might not be the bottom yet. And the key reason is basically MSTR, the underlying asset, might not have reached its own bottom. Okay. As many of you may know, if you are following these yield maxes, especially MSTY, the purpose of the fund is to generate premiums from the underlying volatility. Those premiums are later distributed to us in the form of a distribution. Meanwhile, the synthetic contracts on MSTY are primarily designed to mimic MSTR's share price movement, okay, which is basically strategy. Now, I'm going to take you to MSTR's chart because that's what's important here. All right, so we are here at MSTR's chart. I'm going to select year to date right over here, YTD. And we're going to analyze the lowest price point that strategy has declined to. Okay, let's take a look at MSTR's lowest price point, and as you can see, on April 8th, MSTR reached or declined all the way to $237.95. And if we go back right over here on March 10th, it also declined to about 239, I believe, right? Yeah, there you go. There you have it, folks. So that right there is telling me that there is a possibility for more downside. Okay, there's more room for the downside here. And depending how MSTR continues to perform for the rest of the month, let's see what those possibilities are going to take us down to. Okay, I hope that it doesn't go or decline to that, but I still have to be realistic and I have to prepare myself if that scenario happens. Now, I do want to acknowledge one thing. We are in a bear cycle. Okay, this historically, this past 2 months has been known to be major sell-off. Okay, it's known for that. But I won't deny the sentiment on MSTR have shifted over the past months. Okay, even before the heavy decline we saw starting in the late July. Now, even before the decline we saw starting in late July. Now, friendly reminder, this is all just my speculation, not technical analysis or financial advice. Again, this is only for me, my personal view, as I have to prepare and develop a plan of action in case the scenario continues to play out. Okay. All right. So now that I have shared my rationale behind MSTY's share price movement, I want to shift gears to focus on my cash secured puts that recently got assigned on MSTY. All right. So let's go back to MSTY. Okay, so if you have been following my journey on building a cash flow generating machine with MSTY, you probably know, you'll probably have an idea of where this is going right now. Okay, last week, 2 of my contracts were exercised by the buyer. Okay, which means I was assigned 200 shares of MSTY at different cost bases. Okay, now here's the kicker. Since I have been rolling these contracts for several months without assignment, not only did I collect the premiums along the way, but also managed to lower my cost basis as the expiration got closer. Okay, now let me break it down further so that you can see what I mean by that. Let's go back to history. I'm going to scroll down, so please, you might want to look away, and we're going to go to our history. I'm going to break it down in two different ways. So here is my history. I'm going to click on add all types. We're going to select options, and we are going to find my two assignments right there. As you can see, one of them was for 20. My strike price was $22, and the one below it was the one for $25. So I was deep in the money with those two cash secure puts. That's what they call that. Why do they call it that? Well, Misty's share price at the time was way below my strike price, okay? Meaning that my cash secure put has generated intrinsic value, okay? Meaning that the value of that contract has gone up because I was deep in the money, okay? Hopefully you get that. If not, then I'm still gonna move on because who knows? Maybe I'll make another video about that, how to define that terminology. But the point that I'm trying to make here is that Misty, my two cash secure puts, were deep in the money, which was at $25 and $22. So technically, when I get assigned, my cost basis for those should have been at $25. Okay, and the other one should have been at $22. However, again, because I was rolling for several months, I was able to bring that down, and I'm going to show you right now. Let's go to trade. Let's go to sell. We are going to go to shares right over here. We're going to click on that, and we're going to go to sell in tax lots. Click on that. We are going to select lots right over here, and we are going to find our two assignments, which I'm going to click on them right now. As you can see, right over here, and the one above it, right over there. Okay, as you can see, the date. Those were the two cash secure puts that I was assigned to. Now, if you take a look at the cost per share, that's basically my cost basis. See, they're not at 25 or $22, which were the strike prices that I have selected at that time. I was able to bring it down to 1858 and 1855. That's my cost basis for those two contracts. Why did that happen? Well, again, since I have been rolling the contracts and collecting premiums, every time I did that, it brought my cost basis lower. Okay, so in other words, I have been dollar cost averaging that position by rolling the contract and collecting premiums every single month. Hopefully that makes sense. All right, and that right there, folks, is why I'm such a huge fan of cash secure puts and rolling contracts. Okay, they generate real income, lower my cost basis, and give me a smarter way to dollar cost average, without taking unnecessary risk. Okay, if I had just bought the 100 shares at $25 from the start, I would be staring at a heavier loss here. As you can see right now, I'm in the negative. But if those two contracts, I would have bought them from the get-go, all the 100 shares without doing no cash secure put, this loss would be huge right now. Okay, sure, I missed out on those on the distributions from those 200 shares back then. But trust me when I tell you, I probably would have been on the margin call by then. Okay, who knows? Maybe a couple of those, if that would have been the case. All right. So instead, I have been able to preserve my capital, generated cash flow, and kept myself in control of the trade. Sort of, right? Sort of, because once again, I'm not able to control what the market is going to do or market sentiment in terms of MSTY share price movement, right? But I was able to control at least my trades in a way, right? Okay, so again, that's the power of options. It can give us an edge a lot of investors don't have. Okay, um, so with that being said, I do have other contracts here that are set to expire. Some of them are set to expire this month. Let me go back over here. No. Let's go back. Right over here, as you can see, I still have some cash secure puts that are expiring by the end of this month. I did roll a couple already for the following month, and I was lucky enough to collect a little bit of premium. I didn't collect that much, but I was able to roll those. Okay, and once again, when I roll, I bring my cost basis down. So anytime I roll with a premium for credit, it's great. I'll take it. Okay, even if it's just a little bit. All right. And again, I still have other contracts that are set to expire this month. My plan is to keep rolling them until they are either assigned or expire worthless, which I don't see that happening anytime soon. But that's the plan. Okay, so to wrap it up, I'm no longer reinvesting distributions back into MSTY. Instead, I'll be redirecting that cash flow into other opportunities like PLTY, HOOY, or even CHPY, okay? And possibly some NEOS ETFs down the line. Not now, because once again, I want to keep generating that massive cash flow into our account so that way we can start balancing the portfolio with a little bit more of not so NAV eroded positions. Okay, and that's when Neo's funds are going to come in. There's a few others too. I believe Amplify has a couple. But once again, I'm still working on researching those. But that's the plan. Now, my remaining contracts on MSTY will serve me as my dollar cost average tool if assignment happens, okay? Which at that point, I might be over leveraging that position, but I'll have a plan of action if that happens, okay? I mean, I have 774 shares right now. I have like about 3 or 4 more cash secured puts, meaning I have about 400 shares if I get assigned. So in the moment when that happens, I'll have a plan of action in place to balance the portfolio out and get back into cash, okay, into some equity, because that's what's important for me due to me utilizing margin, okay. All right, so if you found the value in this video, make sure that you subscribe. Make sure that you share if you know of anyone else that can benefit from it. Don't forget to hit that like button. Turn on notifications so that you don't miss any of my next updates. I'm still working on my tax lot video or series. I think it's just going to be 2 to 3. But I'm still working on it because, once again, I want to be able to bring you a detailed, well-informed series on that because, hey, tax time is approaching. And if you can prepare yourself ahead of time, you can have a strategy in place that's going to help you or harvest taxes at the end of the year. Okay? All right, so as always, thank you for tuning in. A strategic investor out checking out. Any questions or comments, leave them down below, and I'll see you on the flip. Take care.